In this Track and Trade Pro trading training video, I want to continue our discussion of the psychology of the commitment of traders. We're looking at the Lean Hogs July 2004 contract, and you'll notice that what we're seeing is a nice, long, narrow channel. And this channel, this sideways market, has gone for about 6 months before this market started to accumulate. Now, as you and I, traders, are looking for an opportunity to catch a long uptrend like this, it's difficult sometimes for us to know when that market's going to start. And so we'll sit there and we'll use our technical indicators. And of course, technical indicators don't do a very good job in sideways markets. And if we go through and turn on some of our indicators, you'll see that. I'm going to turn this market back to about here where we know that the market's going to take off. But if we were looking at this market ourselves and trying to decide when to get into this market for a long takeoff, and we look at our indicators, we'll notice that each indicator kind of whipsaws us in and out of the market during narrow sideways channels. Now there's our AD indicator, which is generally a very good indicator. It's a very strong indicator. It tells us when good markets start and when they end. But the problem is, just like every other indicator, they're not very good at telling us much in a sideways market. Let's go and look at the CCI indicator. Now there again, the CCI indicator is not a very good help in telling us, when a market's going to start, or when it's going to take off, or when it's going to retrace. We don't know from all of these arrows that we're receiving, all these conflicting buy-sell signals. Now, the CCI does pretty good. If you look, it is helping us out a little bit here. I mean, it's giving us, this is a bottom, this little part here, it start to go up, and then it got up this high, and it's, maybe this isn't the top, sell off, bottom, sell off, bottom, sell off, and then buy all the way down. And of course, the reason that is because the CCI indicator is very good at picking tops and bottoms, but it doesn't know where the bottom is either. So it just keeps telling you, this might be a bottom. Oh, no, maybe this is a bottom. Oh, maybe this is a bottom. This is probably a bottom. And then we start back up and say, this is the top. Oh, no, maybe this is the top. Oh, here's a top. And then we come, here's another top. Okay, so we have a little bit of confusion with our indicators. And that's the reason why we tell you, never trust all of your money on an indicator. If you buy and sell every time an indicator tells you to, it's a very quick way to lose all your money to the markets. It's got to be a combination of all these different tools. Here's the DMI indicator, which is also generally a very good indicator, but in a sideways market, it's going to whipsaw you in and out too much. Here's the MACD, again, one of my favorite indicators, but through a narrow sideways market, it doesn't do too well. Here's the momentum, again, very good indicator. This is just proof that indicators don't work that great in narrow sideways markets. Now this is a pretty good one here. It's helping us pick out, maybe if we got in here, maybe we got out here, we might have been able to pick up some money, along the way. In this trade, this is the RSI, which is another one of my very favorites. We got our fast stochastics doing a pretty good job. We got slow stochastics, again, doing a very good job. And the reason we call them slow stochastics, they don't give you quite as many whipsaws. You see we got the buys, the sells. The buys, the sells. But let's turn on the commitment of traders and see what we get here. Again, the commitment of traders is doing the same thing as everyone else, except for we're not getting these arrows based on price. We're only getting these arrows based on what the large commercial traders are doing. Now, the large commercial traders, they're following the markets just like you and me, and they're trying to decide when this market is going to go up and down, and they're using their indicators and their trading strategies and techniques to try and tell them when it's time to get into a market or when it's time to get out of a market. And so the best thing to do is always remember, never buck the seasonal trend and never buck the commercial market trend. If the commercials are all starting to accumulate contracts, like right in here, and you have an indicator that tells you for some reason to go short, don't do it, because the big movers are going to all go long, and if they're all going long, then they're going to start moving the market that direction, and that's the way they're going to make money. Okay? You'll oftentimes notice that the little green guys, of course, those are the small speculators. And the small speculators are the ones that they always say, 80% of all the small speculators lose money. And you'll notice oftentimes that the small speculators, the little green arrows, are oftentimes pointing down during an uptrend, which means, of course, that they're on the wrong side of the market. So let's look at this a little bit further. Now let's advance this market through the trend. And now this is the commitment of traders, and they came along and they said, look, we're going to start dumping our contracts right here. So because they started dumping their contracts, you'll see they started to dump right through here, and the market started to go down. Now it didn't go down very strongly, but that's still a pretty good little move from a commitment of traders point. That's about a $2,400 move in there. But of course they didn't start accumulating over until this point here. So if you would have started accumulating when they say to accumulate, that's about an $1,100 move, which is still pretty good. And actually, this says to accumulate down here, so we're not being fair. So that's about a $300 move. So see, they're starting to, they know and they realize that the market's going in a sideways market through here. But then they start to accumulate. So if you just watch your indicators, watch your recurring price patterns, and watch what the large speculators are doing, use them as a guide to help you know when to get into the market. Now, just because you get an arrow, as we've learned in looking at charts in the past, doesn't mean that it's time for you just to jump in just because they're jumping in. Now, watch for a narrow sideways channel or a recurring price pattern, a triangle, or some kind of a reason for you to get into the market, some kind of a trigger. Remember that we always need to have a trigger to get us into the market. And so maybe this would be our trigger right in here. Maybe we grab ourselves a little narrow sideways channel tool, and we say, okay, the commitment of traders are starting to accumulate right here. I'm going to start accumulating because they are. I'm going to maybe on a break above this, this little channel or something. Give yourself a trigger, a reason to get into the market beyond something beyond. The commitment of traders are jumping in, or all the large speculators are jumping in, so I'm going to jump in too. Not a bad strategy. I'm just saying that you need to make sure that you have a reason to get in, because see, even this one here, once you're in the market, sometimes the commitment of traders will get you out before maybe there's a little bit of money left in the market. They're jumping out right here saying, well, I think we're going to start jumping out of the market right here. What that means to you is maybe it's tighten up your stops. Pull your stops right up in between, behind an area of support, and let the market maybe move a little bit more, and maybe you could have caught a couple other extra $100 out of this market. There's an extra $1,000 right there out of that market if you would have just not jumped out when they said to. But they are starting to liquidate their contracts through here, which is giving you an indication that the market's going to probably start dropping off here. Now we're looking at the lean hogs. This is a nice little channel right here. The commitment of traders are starting to, the large speculators are starting to dump their contracts. This market's going to go down right now. Pretty good guess that this market, when it breaks that trend line, it's going to drop pretty hard. We could come in here and look for a 50% retracement, and we'd probably expect this market to come back down to 68.28.7. So that's how you use the commitment of traders. Use it as an indicator to help you with your other recurring price patterns, your retracement levels, and follow the big commitment of traders. Don't be on the wrong side of the market like a lot of these other smaller speculators are.